Welcome to Reverse Mortgage Radio, hosted by Legend's very own reverse mortgage professor, Bruce Simmons. You have so many options with a reverse mortgage, everyone has a different opinion, and the government keeps changing the rules. You need to hear from the first certified reverse mortgage professional in Colorado to specialize exclusively in reverse mortgages, one of few in the state with the letters CRMP after his name. Bruce has the specific training and education you need to understand what you're buying. Now, here's your host, Bruce Simmons.
Hello, and thank you for joining me today on Reverse Mortgage Radio. It's so much fun for me to get on the radio every week and hopefully help you make empowered, smart decisions about your home and reverse mortgages. And normally, what we do on this show, it's Reverse Mortgage Radio after all, is I get on here and I espouse all the great things about reverse mortgages and why you should do it, and on and on and on. But today we're going to flip the script. We're going to talk about why a reverse mortgage might not be the best decision for you at this time. Now, you might want to wait, or you might just not want to do it at all. But the thing is, we're going to talk about reasons why you might want to wait or not do it at all. See, a reverse mortgage is not a one-size-fits-all type program. There's important decisions to make, and you have to know when it might be best just to walk away from a reverse mortgage and say, no, this isn't for me, or this isn't for me right now. And that's what we're going to talk about today. I'm your host, Bruce Simmons. I'm the reverse mortgage manager for American Liberty Mortgage right here in Denver. Should you have any questions about reverse mortgages, please feel free to call me directly. You can reach me by calling me at 303-467-7821. That's my direct line, 303-467-7821, or visit me online at reversemortgageradio.net, reversemortgageradio.net. On my website, I've got video testimonials. I've got a great consumer guide that you can download. I've even got an area you can click to get a free quote. And your information is not going to be sold. You're not going to start getting all this junk emails or calls. Just because you filled out this one form, you're not going to get 15 calls from different people trying to solicit your business. That's only goes to me. So I'll call you to see if I can answer any questions or explain anything for you. But please call me with any questions you have about reverse mortgages. Now, before we get into the reasons why you should not get a reverse mortgage, you need to kind of understand what it is. A lot of people don't know this, but a reverse mortgage, it's a loan program that was created by an act of Congress in 1987, signed into law by President Reagan in 1988. So this has been around a long time. It's a benefit for senior homeowners who've earned the benefit through age and equity accumulation. Kind of, if you think about it like the benefits a veteran gets with a VA loan. This is a benefit provided by the federal government for senior homeowners. Now, this is not a loan from the government, though. You have to be aware of that. This is a loan from private companies, and it's insured by the federal government. This is an FHA-insured loan. FHA stands for Federal Housing Administration. And in a nutshell, it allows you to convert a portion of the value of your home into money that you can use however you want. You're not taxed on this money that you get because it's loan proceeds. You're actually getting a loan. But as long as you live in the home as your primary residence, you pay your property taxes, pay your homeowner's insurance, you maintain the home, and keep your name on title. You do those 5 things, and you never, ever, ever are required to make a mortgage payment. You're still responsible for your property taxes and your homeowner's insurance, like I just said, because it's your house. The bank does not take your house. That's one of the biggest misconceptions people still have, and I've been battling it for 22 years. But the house is yours. You can paint it purple. You can sell it. You can do whatever you want with the house. You can add a bedroom. You have to maintain it, obviously. It has to stay in good condition, but it's your house. And there's no prepayment penalty on reverse mortgages either. So if you ever want to pay it off or sell the house and move, you can. But that's your choice. The nice thing about it is you can take the money in a number of different ways. You could take it as a lump sum. There's certain restrictions. We have to pay off any existing loans on your home first before you have access to any additional money beyond that. But even if you only have enough money to pay off your mortgage, you don't have a mortgage payment then. If the principal and interest portion of your mortgage is $1,000, that's $12,000 a year you save in not putting out money. You keep that money in your pocket every month. But like I said, you're still charged interest every month. So that interest gets added to the loan balance if you're not paying it. You certainly can make payments on this loan, but you're not required to. And when you don't, the interest gets added to the loan balance. But you can take any extra money after you pay off your mortgage as a lump sum. There's certain restrictions about that. You can set up a monthly payment where we actually deposit money every month in your bank account to help your cash flow. You can also set up a line of credit. Works just like a HELOC, only way, way better. And I've done whole shows on the benefits of the reverse mortgage line of credit. Fantastic program. Go to reversemortgageradio.net and you can listen to all my past shows that are there over the last, almost 8 years now, I think. And you can also do a combination. That's what most people do. You might take out $5,000 or $10,000 maybe to do some home repairs or take a trip or pay off some bills and then leave the rest in a line of credit. Or maybe you want to receive a monthly payment and leave $50,000 in a line of credit, however it works. But there's a lot of different options with reverse mortgages. So there's a lot of reasons to do reverse mortgage. We customize it to your needs. But let's talk now about reasons why you may not want to do a reverse mortgage. One is if you're planning to move soon. If you're going to move like in the next year or 2 or 3, it may not be in your best interest to do this because there's upfront closing costs and there's no refund of the upfront closing costs. Like I said, there's no prepayment penalty, but it most likely doesn't make sense if you're going to move or you're going to leave the home soon. Now, there's always exceptions. A couple right off the top of my head. One lady, and I've said this before, she had Lou Gehrig's disease, and she was not going to leave her home. She was not going to move to assisted living, but it cost thousands of dollars a month. And this was 20 years ago, because this was like 2005 or 6 when I did this loan for this lady. She knew she wasn't going to live in her home longer than a year, and she ended up living there 9 months. Now, that loan did not make financial sense at all. However, for her, it made emotional sense. She was able to stay in her home. Her family was nearby. She had 24/7 in-home care, and it was expensive, even 20 years ago. It's way more expensive now. And then there's the story of another lady, if you're really good at remodeling homes, and this lady was a real estate agent. She was very good at that. She bought a home with a reverse mortgage, and she moved into it. She renovated it, and then she ended up selling it less than a year later, purchased another home because the value increased dramatically, so it paid for the costs. And she bought another home, did the same thing. And then finally she moved into the final home that she stayed in with a reverse mortgage. So she bought 3 homes in 3 years roughly using reverse mortgages. And she sold 2 of the 3. And she made money on them but she knew what she was doing. I don't recommend doing that unless you know what you're doing. All right. The second reason why you might not want to get a reverse mortgage right now is if you cannot afford the property charges. Remember, you have to continue to pay your property taxes and homeowners insurance and any HOA fees, and you have to maintain the home. If you cannot afford to do that, you should not get a reverse mortgage. And unfortunately, I had to turn a lady down recently. I did a loan for her in 2009, back when there were no requirements. We didn't qualify people back then. As long as you were old enough and you had enough equity, you got the money with a reverse mortgage before 2015 when the financial assessment came into play. And now this lady's been able to maintain her home. I don't know, based on using credit cards and things, but probably in 23 or 24, she called me and I did her loan in 2009. and asking me to refinance her home. And she did qualify to get enough money where it made sense for her, but she could not qualify income-wise. Her Social Security is like $850 a month, and that's all she gets. And unfortunately, she had some credit cards because she's been using those credit cards. So she had some debt, and I just couldn't qualify her because she didn't have enough money to pay her taxes and insurance and on a regular basis. She was actually, the lender would pay the taxes for her on a reverse mortgage. So you have to pay your taxes and insurance. And when you don't, the lender will pay them for you. But then you have to set up a repayment plan. She was on a constant repayment plan. So she was making payments to her reverse mortgage company to pay her taxes and insurance. That's the worst way to do it, because if she misses some of those payments, she could lose her house. It's that cut and dry. She could be foreclosed on. And this is the thing that really hurt the reverse mortgage industry in the mid 2000s. There were a lot of people, before we qualified people income and credit wise, a lot of, well, I don't want to say shady, but there were some people that got into the reverse mortgage business from the subprime business. So you take it as you will. And they were not as upfront with people as they should have been about the responsibilities that the homeowner had. Now, they have to do counseling. People still have to talk to reverse mortgage counseling. But even back then, the counseling was not as good as it is now. There weren't as many requirements placed on counselors. That's one of the reasons why their counseling is a little more difficult to get now, because there's fewer counselors, because they've increased the requirements for the counselors themselves to be knowledgeable about reverse mortgages, and some of them just don't want to do it. But basically, a lot of these people took out reverse mortgages without really being fully aware that they had to pay their taxes and insurance. And then they didn't do that, and they ended up getting foreclosed on. And the reason was, obviously, because they had a reverse mortgage, right? They got foreclosed on because they had a reverse mortgage. No, that is not the reason. The reason was they didn't pay their taxes or their insurance. And these things are requirements to keep the loan. So you got to make sure you have enough money to be able to stay in the home. We want it to be a sustainable solution for you. Okay. Number 3. The third reason why you might not want to do a reverse mortgage is that your home is in very, very poor condition. Now, that may be a reason why you want to, but it might be a reason why we cannot help you with it. FHA has requirements that the home has to meet. There are certain requirements. And a lot of times, that what they'll do is they'll say the appraiser will go out and he'll have repairs that have to be done on the house. Say peeling paint. That's a common one. Not as common as it used to be for some reason. But anyways, there's peeling paint along the trim, and the garage door is really bad or what have you. And they're going to say, well, you have to repaint the house. However, in that situation, we don't require you to repaint the house before getting the loan. What we do is we set money aside. So let's say you qualify for, after you pay off your mortgage, there's $50,000 left over. But the appraiser says, well, I think it's going to cost $2,000 to paint your house. So that's my estimate of what it'll cost to paint the house. We're going to set aside $3,000 out of that $50,000 that you have available and set it aside. It's 1.5 times the repair estimate. And you have 6 months from the date of the closing to get those repairs done. And then you've got that money that's set aside to pay for it. Or you could pay for it out of your pocket and then just get reimbursed. But that has to be done. And if you don't do that, they could close out your line of credit if you don't get that done within that 6-month time period. So that's a very simple repair. But if you've got cracked foundations or leaky roofs, big broken windows, unsafe stairways, those things aren't, they're a health and safety issue. An unsafe stairway could be you don't have a handrail. That has to be done prior to closing. Or a broken window has to be fixed prior to closing. Those things are important that you understand how that works. But a lot of small things don't have to be fixed prior to closing. If you've got something major wrong with your home, that it's on the foundation is cracking or something like that, that has to be repaired prior to, and you might not have the money to get that fixed. Now, I think there used to be people in the industry basically that they would do the repairs, they would place a lien on your house, and then you could get a reverse mortgage, and we would pay off that lien with the reverse mortgage. So let's say that the repair is going to cost you $20,000. The repair places a lien on the home for that money. They don't require you to pay it up front. And then when you get the reverse mortgage, we pay off your existing mortgage and that repair that's $20,000, what have you. By the way, if you just tuned in, you are listening to Reverse Mortgage Radio. My name is Bruce Simmons. I'm the Reverse Mortgage Manager for American Liberty Mortgage. Today, we're talking about reasons why you should not get a reverse mortgage. Or let's just put it more accurately, reasons why you may not want to get a reverse mortgage at this time. Because in my mind, everybody should get a reverse mortgage. But I think that there might be times where it's not in your best interest. Okay? And we've talked about 3 already. We said if you plan to move soon, that may be a reason not to get a reverse mortgage. And then when you do move, you could get a reverse mortgage for purchase. I didn't mention that before, but you can get a reverse mortgage to buy a home. And let's say you were going to move, you plan on moving when you're downsizing or what have you. Don't get it on the home you're in. Get the home you're in all ready for sale so you can get the top dollar for it. And then you sell that home, put that money from the proceeds from that sale as a down payment on the new home, and you can get a reverse mortgage for the difference. That's a reverse mortgage for purchase. That's a completely different show, but that's the first reason why you might not want to get a reverse mortgage right now is you're planning on leaving the home. The second reason is that you can't afford to maintain the home. The third reason is that it's in poor condition and you don't have the money for the repairs. There might be ways around that. Call me if you're in that situation. I'd be happy to do some research on that for you. But the fourth reason is if you rely on Medicaid or you need to qualify for Medicaid soon. If you receive some kind of needs-based program. So, for example, you don't want to take a reverse mortgage and get a big lump sum of money, put it in your bank account. You can only have $2,000 in your bank account and still receive Medicaid. Now, I'm no Medicaid attorney, so I don't know all the rules around it, but I know that having money can cause problems. Now, I have done reverse mortgages for people on Medicaid. We just have to be very, very careful about how we distribute the funds. We don't want to put $10,000 in your bank account. That will disqualify you like that. Don't do that. However, if you're struggling to make ends meet and an extra $500 a month is going to make a huge difference in your life, that certainly is a possibility. So we deposit that money every month in your bank account. Or let's say you don't want that. We can send you a check in the mail. It's not as reliable. We can still do that where you get a check in the mail. You could take it to your bank and cash it. So then you never deposit the money in your bank. That's another way kind of around that. But you want to be careful. Talk with an experienced loan officer. It helps if you have a Medicaid person or an attorney that you've talked to about this. Most of them are probably just going to say don't do it, but there are ways around it. You just got to be very careful how it's done. And the fifth way that that you might not want to do a reverse mortgage, and this is a little bit questionable because if you're feeling pressured, and not by the loan officer, I mean certainly if a loan officer is pressuring you to do it, shut that down quick. That's easier. It becomes a little more iffy when family members are involved. They're pushing you to help them out. Or certainly if a stranger has an investment opportunity for you. Don't take money from a reverse mortgage for investments. That just doesn't make sense 99% of the time. Now, if you know how to fix up homes and you know that this reverse mortgage can help create cash flow for you so you can buy a home, fix it up, and turn around and sell it and then pay money back towards the reverse mortgage, and you're experienced with things like that, that's a different situation. But if you're feeling pressured from somebody, It just doesn't make sense. Do what you can to try to not do it, a reverse mortgage in that situation. It may still work for you, but just you don't want to be pressured into it. Call me if you've got a relative that's pushing you to get money to help them out. Call me and let me know. Say, hey, look, I've got this relative. My son or my grandson really needs this money for a business venture or to pay off these debts because these debt collectors are hounding him. Call me and we'll talk about it. I don't need to close your loan to pay my mortgage payment, okay? I've got business and I've got savings. You don't want to deal with somebody who really has to close your loan so they can pay their mortgage payment. And they're not going to worry about what's right for you. And that's where if you call me and you explain the situation, I've talked people out of it before. I know it's kind of goofy, but because I only get paid when I close a loan, but I have known that this is not right for this person, and I didn't do the loan for them. These people lived out in Lyman. I went out and met with them. They talked to another lender, a big company, that they just wanted information. They gave them their social security number. Don't do that. But they gave these people the social security number, and the next day they got a big packet of an application in the mail. This company, all they wanted was information, but this company went and input an application into the system. They pulled their credit and they sent them an application to sign. And they had it sitting on their counter when I went out to meet with them, because they called me afterwards. And it wasn't right for these people. I'm trying to remember. I think they were going to be moving because they weren't happy out in Lyman by themselves. They needed to be closer. They moved out there and bought land, and they couldn't really keep that land in good condition, and it was too much for them. And so they were going to they wanted to move back to Denver, the Denver area, I think Aurora. And I told them, I said, you should not do this. This does not make sense for you. If you wanted to buy a home in Aurora, and I don't even think they were going to buy a home. I think they were going to rent because they really couldn't maintain a home in their physical health. So there's lots of reasons why you should not do a reverse mortgage. There's a lot of reasons why you should, but keep in mind that you don't want to be pressured into it. Nobody feels good about that. One more thing. This is a bonus one, 6. I was going to say if I had enough time, and it looks like we do have enough time. And this is a little iffy too, but basically, if you're a spendthrift, okay, I hate to say it that way, but if you're not financially disciplined, you have to remember you are spending your equity. Okay, keep that in mind. And what I want to do real quick is read a couple of passages from a book called Reverse Mortgages, The Financial Ugly Duckling. And this is a very informative book. I really like the way the authors put this together. The authors are Brady Mullen and his brother Dan Mullen. And Brady was a financial advisor. Dan is a CPA. And this is a very unique book, the way it's written. But he talks about here, he says, sometimes homeowners can feel like you've been given hundreds of thousands of dollars that don't need to be paid back because there's no monthly payment required. Beware the temptation to spend this frivolously. When you access funds from a reverse mortgage, you are spending your wealth. It's the equity in your home. So using this is a responsible way is paramount. The flexibility and liquidity of the HECM is, on balance, a tremendous benefit. But remember, the future is unpredictable, and there may be medical expenses, inflation, or other life surprises that may require financial resources. So we try to remind people to treat it like they would any other asset they built up over their lives, because that's exactly what your home equity is. And then they continue in the book, they say, like an IRA or a Roth IRA, your equity is your wealth. And like any form of wealth, you may spend it any way you choose, but it can be tempting to spend it more carelessly than a retirement account. We believe that this is true because people don't often think of their home equity as a retirement planning asset. And when it becomes apparent to them that, in fact, it is very much the wealth that they can use in retirement, or even earlier, then it can feel like a windfall or playing with house money, they say is a nice little pun. So keep in mind that any money you get from a reverse mortgage is money that you have available to you that should be used in retirement. Now, you can use it for trips and things like that enhance your lifestyle. Use it to improve your home or what have you. There's a lot of different reasons why people get reverse mortgages, but you don't want to spend it frivolously. And this kind of goes back to the other one about being pressured. If you're just giving this money to family that are pressuring you, that's not a good idea. Now, I've said before, sometimes it's better to give with a warm hand than a cold hand. So you have this money you can give to people, but do it in a responsible way. If you're going to give, don't feel pressured to give it to somebody so that they can make this business investment. Loaning it or giving it, even as a loan too. You have access to this money. Maybe you want to try to instill some responsibility in your grandchild in loaning them a down payment so that they don't have to pay mortgage insurance. And I know my dad did that with me and charged me interest. Actually, from the very beginning, my dad, when I was 16 years old, he loaned me $800 to buy a 1970 Plymouth Duster. Had a 3 on the tree, 318 engine. Oh, it was great. I loved it. But that he loaned me $800 because I kind of ruined my mom's car first. That's a long story. But he said I was not responsible with her car. And so, of course, he bought my 2 older sisters' cars. They got straight A's and everything in school. But me, I had to pay interest because I was not responsible at the time. And I was responsible with that vehicle. I made sure that I took care of it. So if you want to help people, I loan them the money and have them pay you back. But the nice thing about the reverse mortgage is it allows you access to money that you might not otherwise be able to help these people out with. And of course, if you want to give it, it's your money to do with what you will. But I think that overall, a reverse mortgage is a fantastic program as long as you enter into it with open eyes and know your situation. I mean, there's always situations that can change. You might have a stroke a year from now, and that completely changes everything. Or a spouse may pass away unexpectedly, and it changes everything. So to recap, there's the 6 reasons why you might not want to get a reverse mortgage right now. Maybe later, but not now. If you're moving soon, number 1, if you cannot afford property taxes and insurance or maintenance on the home. Number 2. Number 3, if your home needs major repairs. Number 4, if you're on Medicaid. Number 5, if you're feeling pressured or unsure. And then number 6, if you're not financially responsible. Please feel free to call me. My name is Bruce Simmons. I'm the reverse mortgage manager with American Liberty Mortgage, and I'd love to answer any question you have about reverse mortgages. Reach me directly at 303-513-2748. 303-513-2748, or visit me online at reversemortgageradio.net. Thanks so much for joining me today, and I hope you have a fantastic day.
Call Bruce Simmons today. Ask about his free Colorado Consumer Guide, 303-467-7821, or reversemortgageradio.net. Bruce will come to you anywhere across the Front Range to make sure you understand how reverse mortgages work. Regulated by DORA, NMLS number 409914. American Liberty Mortgage is an equal housing lender.